Stocks ended a volatile week with a triple-digit loss, but the key gauge that everyone is fixated on right now is interest rates. Even with the pullback the last few days, rates have spiked over the last 2 months as Wall Street tries to figure out if and when the Federal Reserve will begin winding down its bond buying program. More clues could come over the next week when the Fed meeting occurs. And when it does come to rates, the big one for most people is tied to their homes, with the 30-year mortgage right now right around 4% and trending higher. Just who do rising rates hurt, and will they slow the recovery? Diana Olick takes a look tonight.
Anyone who bought a home 10 years ago knows today's mortgage rates are a huge bargain, but rising rates are still spooking the market.
I'm starting to see actually some of the first-time home buyers start to realize this is the time to get into the market.
The 30-year fixed conforming loan hit 4.15% last week, up from 3.59% at the beginning of May. That's a 14-month high. While that has pushed refinance applications down 36% in a month, purchase applications fell just under 2%. Some home builders are actually seeing sales gains.
It's the equivalent of a price increase. It creates urgency. Right. We're actually seeing more sales now because rates are beginning to creep up very slowly. And if that continues, and if we stay in a manageable range, we'll be fine.
And rates mean nothing to a large segment of today's buyers. 32% of buyers in April were all cash, up from 29% a year ago. No mortgage at all. And that's April, before rates really started to spike in May. These buyers are keeping the distressed end of the market going. 1/5 of April buyers were investors who, again, largely used cash. Take California, for example, a big investor market where sales are now surging. The typical mortgage payment that home buyers committed to last month was $1,227. That was up from $1,006 a year ago. Adjusted for inflation, last month's typical payment was still 47% below the 1989 peak and 57% below the latest 2006 peak. So, who do rising rates hurt? First-time buyers, who accounted for 29% of home purchases in April compared to their usual 40+%.
We might see some buyers have to lower their expectations.
The trouble is, mortgage rates are rising right along with home prices. Not a great mix. Buyers are losing spending power, but on the flip side, potential sellers are gaining home equity, allowing them to move up. It begs the question, does it all even out in the end? For Nightly Business Report, I'm Diana Olick in Washington.